Alright, what's up, team? This is Taylor, and it is Sunday, May 8th. So we'll jump into the weekly watch list here, guys. We'll go through a few of the setups here and a few of the notes, and we'll get ready to get back to work. So hope you had a good weekend, and again, happy Mother's Day to all of you moms in the group. But jumping in here, team, we'll jump into the watch list here in a second. First, we'll kind of come on down here to the notes and the game plan for the week. So I'll read through these real quick, but the overall market structure remains incredibly bearish heading into this week. And though we've already seen some pretty significant selling throughout the market, we have weekly squeezes, we have 3-day squeezes, 2-day squeezes, daily squeezes, all over the place. But then, most importantly for the S&P 500, we've got a weekly and a 3-day squeeze that hasn't even fired short yet. So this leads me to believe we have got plenty of potential for more downside. And then looking back at Friday, not just the S&P 500, but most of the market, we get a close down near -2 ATR, and we did finally see that put-call ratio spike above 1 on Friday. So remember, when the put-call is above 1, pretty much everyone out there is getting short. So as a majority of the market is getting short near key support levels and near these key extensions, we do have to keep in mind there is a potential for a short squeeze really at any given point, which basically just means you want to be careful about getting short down at these extensions, even if things do continue to trade lower. So in terms of where we would like to put on entries for shorts, the short squeeze scenario would be ideal for us, as it should give us the opportunity to get a few bounces that we can short into resistance. So then the watch list. The bullish watch list remains basically the same, with the energy, gas, oil trend basically being your last, solid uptrend here. And then with that being said, any dips in the energy names, any dips in UNG, USO, they should be buying opportunities. And then a few of you, a few chart requests from a few of you. A few of y'all have been looking at corn and wheat, and a few of these agriculture plays. So there are a handful of good setups remaining in the agriculture space, most notably corn and wheat. So though these are cheaper ETFs, they can still make for a good setup to buy a few calls on. And then one more note here, guys. While I have added a few more names to the bearish watch list, the major focus is going to be the S&P 500, big tech, so QQQ or XLK, and then Apple. So we'll jump into the Apple chart here. We'll kind of go over Apple. But then in terms of a few trade ideas, something I've been doing for the last month or so are the Friday expiration iron condors on the SPX using JC's quant levels, the weekly quant levels. So we'll take a look at those in this video, but I do potentially on Monday want to open up one of those on the SPX, for Friday's expiration, and then maybe take a look at the monthly quant levels for a potential iron condor for something like June 1st expiration. So we'll take a look at Apple, we'll take a look at that, and then one potential trade idea that I do think could be profitable. Do we get the flush to the big, psychological level of 2,000 on Amazon? It may be not. However, I do think there could be a buying frenzy. I do think, pretty much 2,000 could be a big level of support. So one idea we could look at are some unbalanced put butterflies down there at 2,000. So all things we're going to jump into, guys, and then quick look here at the watch list. And again, the bullish watch list doesn't really change. Natural gas, energy, U.S. oil. I do think wheat looks really good. I do think corn looks pretty good. Then we've got some BMY, some Hershey. And then we have the UVXY, which is a volatility index. So we'll take a look at a few of those, and then, as far as the short side goes, it's, the indices, basically all the sectors. So to try to make sure things aren't too overwhelming, trying to keep this list as small as possible. So we'll jump in here, guys, but first thing I want to look at, again, is going to be that weekly chart. Because granted, if we measure things from the recent high to where we currently sit, we've seen a pretty good pullback. And of course, there's names that are down 40, 50, 60, 70% off their highs. So granted, we have seen some pretty good selling pressure and a pretty good decline in the market. since early January. But I show you the weekly chart to say, if any part of you thinks there's no more room for any downside, I would argue the fact that we're in a bearish weekly squeeze that still hasn't fired, this to me leads towards the potential for a lot more downside. So keep that in mind. And the same thing goes for names like, names like Apple. Now, from 180 to 150 and change is a pretty good retracement. It's a pretty good pullback. But we're in a weekly squeeze under the 21 EMA with a shifting histogram. This fire is short that could be 4 to 8 weeks of momentum to the downside, and then the same thing here goes for Tesla. From 1240 to 800 is a good flush. But we're in a weekly squeeze, we're under the 21, histogram shifts. So the point being, yes, we have seen some blood in the streets, so to say, but from a trend standpoint, from a weekly squeeze standpoint, party hasn't even started just yet. So keep that in mind. And really, in terms of our bigger picture game plan, it's all based on the structure of this weekly chart. When we're above the weekly 21, and there's positive histograms, and there's positively stacked EMAs, and there's green 10x bars, and we have buy signals on our daily chart, pretty much our major focus is playing the market to the upside, getting positioned in those bullish daily squeezes and buying the dips to the 21 EMA. The current game plan of mainly wanting the short bounces is because of the structure here of this weekly chart. We're under the 21, no stacked EMAs, red 10x bars, negative histogram. We're in a squeeze, obviously, and then we have sell signals here on the daily chart. So until that structure changes, we're looking to short bounces, and I think there's a lot of potential here for plenty more downside. So keep that in mind heading into this week. But as far as a few spots you want to focus on, quick look here, XLE. Still perfectly structured, I think, for more upside, especially after you got that flush to the weekly 21. So this closes Friday at highs, but any dip here will look to get some action going. So as far as XLE goes, I think, the typical cast of characters, right? EOG looks pretty good. We've got buy signals on Oxy. We got buy signals on ExxonMobil. And now Chevron is once again printing buy signals. And I tell you what, now that Chevron is done with earnings, if we can get a little dip here, I think this makes for a good entry for a push towards 175, 180. So Chevron is lining up pretty good here. Then there's names like LNG, there's names like Fang. Whole group is looking pretty good. So we will have all eyes on energy, and then as far as natural gas goes, UNG. This trend keeps on trending. So if we could get a move under that daily AEMA, we might get the flush down towards 26, and we would like to buy it around 26. So keep it simple, guys. Make sure you're on Thinkorswim or whatever platform you're using. Make sure you got a few chart alerts going. It's a busy market. There's a lot going on. It's easy to go into the week wanting to buy the dip on UNG, and then UNG dips, and you miss the whole opportunity. So keep a few chart alerts going there, and then next up would be USO. Nice daily squeeze, and if you grab this tool here, you can pretty much see the range you've been trading in, right? With the upper end of that range being pretty tough resistance around 83, 84. So potentially this breaks out and doesn't offer an entry. If it does happen to dip back towards, $80, $78, I think we'll jump in looking for that breakout and that push through 85. So USO does look pretty good. And in addition to the daily squeeze here, not a bad looking 3-day squeeze. So XLE, UNG, and USO. And then as far as a few of the other setups go, and again, a few of you had mentioned these in the chat yesterday, you gotta like wheat here. And it's a pretty clear range. You've got support here around we'll call it $10, a little bit more, but $10 is going to be key support. And then you got resistance around $11 and change, $11.50. So I think a move under $10 probably sees that daily squeeze fire short. But if this could continue to hold structure above that daily 21, and then if that histogram can start to pick up some momentum, this could be setting up for a push towards $11.50, $12. So we might look to get positioned for that move. And what we can do, guys, because we're trying to time the explosive daily squeeze push, what we can do as far as trying to time our entry is find something like this 4-hour squeeze. And this looks really good. It's above the 4-hour 21. There's a positive histogram. So any little baby dip here could be a good spot. So I think wheat looks pretty good. And the next up here is corn. Now it's a brand new daily squeeze. So I think even more important on this one to go look for a squeeze on another time frame. And as far as corn, we have a 2-hour squeeze. Now you're going to notice here, this 2-hour squeeze looks a lot different than that 4-hour squeeze in wheat. This is under the 21. There's no no positive histogram, no positively stacked EMAs. So being that the daily squeeze is brand new, we're only one dot in. Beautiful trend, good structure. We've got the buy signals, but as far as this exploding into new highs, let's be patient with that. And what I would like to see is a 2-hour squeeze starts to shift. Let's get above the 21. Let's shift the histogram positive. Let's get some stacked EMAs. Then I think we could take that 2-hour squeeze as an entry for that next push higher out of that daily squeeze. So wheat looks good. Corn looks good. And then we got a little bit of BMY. Nice trend. We got our buy signals. And then notice on Friday, the histogram had gone negative. It's still negative, but it is trying to shift. We get our first yellow bar there on the histogram. So if that can continue, and then if we can get positioned inside of something like, let's see here, the 4-hour, 2-hour, 60-minute, 30-minute, 15-minute squeeze could be good for a push towards $80. So if we take a look at, say, the 4-hour squeeze, this is exactly what we're looking for. Above the 21, positive histogram, stacked EMAs. Then we look at the 2-hour squeeze. Above the 21, stacked EMAs, positive histogram. So BMY sets up pretty good. Keep a close eye on that one tomorrow morning. Then we've got Hershey. Very, very similar setup to BMY. And then we got the VIX here, guys. Or the UVXY, rather. So keep in mind, getting long the VIX is, basically the same trade as getting short the S&Ps or the QQQs. If you get long VIX and this explodes to $25, $30, guess what? The S&Ps, the Qs, the whole market's probably rolling over. So, in the event we do get a bit of a short squeeze this week, it doesn't even have to be a short squeeze. If we can get a decent bounce, if we can see the UVXY back towards 15 or so, we might look to come in here. And in terms of trying to get some easy trades on, might look to do a few put credit spreads on UVXY. Some decent premium here. So if you could pick up something like this 15 by 13 put credit spread, if we could pick this up for $1, which we should be able to get on a dip, it's a 1-to-1 risk-reward ratio. I would love to get a 1-to-1 risk-reward ratio with the idea that over the next 2 to 4 weeks, you're going to see the UVXY trading into 22, 23, 24. So I do think a potential trade there, but keep in mind, it's, again, the same trade to an extent is getting short the S&Ps or something along those lines. So there you have it, guys, as far as the upside goes. Now, in terms of the bearish watch list, shorting the S&Ps kind of simplifies everything. You've got sell signals in the financials, the industrials, the transports, big tech, the semiconductors, healthcare. If you got sell signals on everything, shorting the S&Ps is typically going to cover all the bases. But we do want to do this on a bounce. And of course, in hindsight, you get the huge rip after the Fed on last Wednesday. In hindsight, would have loved to have shorted the crap out of everything on Wednesday. We'd be in pretty good shape here. Admittedly, I thought we were going to get a little bit more of a push into Thursday, Friday. No such luck. But still, we want to be really careful about getting short down here. We've seen this movie far too many times. Feels like the end of the world. Feels like the market is about to totally get annihilated. But you get aggressively short down here at -2 ATR. And you get caught up in the short squeeze. Even if it lasts for 2 to 3 days, it's painful. So we got to keep that in mind. And then if you look at Friday, and you look at the put-call ratio, we did get the spike through 1. Plain English, guys, what this all means is a lot of folks, right, a lot of participants in the market are getting short right here at key support. They're all looking for that break under that low. I do believe, of course, at some point we're going to break that low. But I think the place to put on the short for that move is on that bounce. Get the bounce. That's where you short it. Then you try to catch that flush and the break under support. If you short up here, by the time we're down here trying to break through that low, you're sitting on some good profits. More importantly, if you short up here, you can take the ride down as support, and you can comfortably sit through a bounce. If you short down here in the hole, if you short down here at support, the bounce is not comfortable. So we got to be patient here as far as getting a short on the S&P 500. Same thing goes for XLK. Same thing goes for something like the transports or even the QQQ. All things we could look to short, but we got to pick our spots wisely. But as far as one of our bigger focuses here, if you look at Facebook, right? Obviously, Facebook has gotten creamed. If we look at Netflix, obviously Netflix has gotten creamed. You look at the chart sometimes, and the numbers don't really sink in. From $700 to $180. It's a 75% pullback over the course of 4 to 5 months. Okay, then there's Amazon, right? Amazon goes 37, we'll call it 3,800. 3,800 to we'll call it 2,200. That's a 42% pullback. There's Google. 3030 to 2,300. There's Microsoft. 350 to 270-ish, but then there's Apple. And granted, from a high of 182 to a current price of 158, it's a 13% pullback. So, Apple's taken a bit of a hit here, but in comparison to its peers, this has held up, incredibly well here. I don't think that trend is going to last. My thinking is, if the S&P 500 ends up firing this 3-day squeeze short, and then ends up firing this daily squeeze short, or the weekly squeeze short rather, we're going to see plenty more downside in the market. And what I don't think is that Apple's going to continue to hold up. So then if we look at Apple's structure, daily squeeze under the 21 EMA was sell signals, no stacked EMAs. 3-day squeeze under the 21, no stacked EMAs, negative histogram. Then you have the weekly squeeze. No stacked EMAs under the 21, negative histogram. So I do think potentially Apple is setting up here for a flush down towards 145, 140. So this is our top focus as far as an individual stock we'd like to short. Ideally, on a bounce. So one trade I'm going to look for us is going to be, let me do this here, guys. What I am thinking for us is June 17th expiration, put debit spread, and I'm thinking 165, 145. Now currently it's going for about $8. What I would like to see here is, can we get a bounce this week And can we get this at a better price? I'd like for us to pick this debit spread up. It's $6.50. All right, now check this out. If we can get it for $6.50, max loss is $650. Max profit is $1,300. Y'all know I'm a little bit more concerned about the the risk versus reward between our targets in terms of the upside target and the downside target. So, with that being said, let's pull up the Analyze tab here. Alright, so target to the downside on the Apple weekly squeeze is going to be, we'll call it 145, minus 2 ATR. My exit is going to be on a weekly close above the weekly 21. So we'll call the exit 165, 170. So, if on a bounce next week, or this week, if we can snag that put debit spread at 650, let's look at the risk reward here on that trade, and we'll kind of analyze this into, say, May 20th. A couple weeks into the trade. So a couple weeks into the trade, if Apple rallies like a bat out of hell into 165, 170, we'll lose anywhere from $200 to $300 per contract. So we're risking about $200 to $300. Now, if Apple can make a move down to our 145 target, we stand to make $700, and then down at 140, $900. So we're risking $200 to $300 to potentially make $700 to $900. Obviously, a good risk reward, man. So that, guys, I think, just in terms of the, I'll show you the multi-squeeze tab again. Anytime, basically every time frame has a squeeze, you're looking at a stock that's fixing to do something. Weekly, 3-day, daily, 4-hour, 2-hour, 30-minute, 15-minute, 5-minute. None more important than that weekly and the 3-day. This closes back above the weekly 21, begins to shift momentum, yada yada. Then I'm going to think, okay, maybe this holds up just fine. So long as we're squeezing all over the place under the weekly 21, with that histogram flipping negative, I'll be looking to short this. So, S&P 500 on a bounce, Apple on a bounce, two shorts we're looking to focus on. And then we'll go through a few more names here on the watch list, guys, but birds of a feather kind of flock together. Meaning if the market bounces, they'll all bounce. And then when and if the market rolls over and dies, they should all perish. But a few names we can focus on. I do like the daily squeeze in Best Buy here for potential short. And we got the sell signals. So I kind of like that. Weekly, 3-day, daily, 4-hour, 2-hour squeeze. So Best Buy, there's another name, fixing to do something. The best way to look at a squeeze is it's a buildup of energy. So Best Buy is building up energy on the weekly, 3-day, daily, 4-hour, 2-hour, 30-minute, 5-minute chart. With sell signals, negative histograms, negatively stacked DMAs, leads one to believe it might fire a short. So Best Buy looks like a good short. We got T-Com, bearish daily squeeze with some negatively stacked DMAs. Got that on the watch list. I think T-Mobile here. Histogram shifts. That kind of looks like it's getting ready to belly flop into lower prices. Then we've got Visa. Would really like to short the bounce on Visa. Negatively stacked DMAs. We got the sell signals. And a few more here, guys. We got Yum. Little pop after earnings. Right back down she goes. So that strikes me as a daily squeeze that's going to fire short. And then Keurig Dr. Pepper, looking like the doctor here in this high compression squeeze, wants to see lower prices. And for those of you in the options room over at Simpler, y'all know these high compression daily squeezes, they got a knack of firing counter trend. I would argue the trend is pretty bullish here. So that could be an interesting short. But there you have it, guys. As far as Again, the bullish watch list is basically the same, but then you've got the wheats, the corns of the world. I think look very solid. Certainly worth a look. And then as far as the bearish watch list, it's everything except energy, oil, natural gas, and agriculture. Our major focus, though, will be on the S&Ps and the Big Apple. A few more things here, guys. I'm going to let you go. One thing I've been doing here over the last few weeks are... let me see. Yeah, so one thing I've been doing is setting up... Here we go. But on Mondays, setting up Friday expiration iron condors on the SPX based on the quant levels here, which is a new tool that JC, I want to say a couple of months ago, 2 to 3 months ago, JC came out with this tool. So I'm not going to do a full deep dive on this, but what I will show you here, I'm going to edit studies, and we go to quant pivots, let's go monthly. All right, so here's what I want you guys to just focus on for now. All right. You've got the white line, which is where we started this month. And obviously we're looking at the month of May. The red line all the way to the top, that is H2. Right? That's known as H2. The green line at the very bottom, that is known as L2. Now, without going into details on what this is, how this is all quantified and things of that nature, this analyzes the monthly chart, let's see, over the last 281 periods. So, over the last 281 months, 89% of the time, the S&P 500 is going to finish the month somewhere between H2 and L2. Right? At the end of the month, 90% of the time, we're going to close somewhere inside of this range. So we can get the same numbers for a weekly basis. So once the market opens up on Monday, based on where we open, then you get the levels quantified for that week. So then you get a sense of, okay, where's H2 for this week, where's L2, and what are the odds we close inside both of them. So what I've been doing is taking those numbers and selling Friday expiration iron condors. So something we're going to look at early tomorrow afternoon, and then I'll look to get a trade posted for us. But one thing we could look to do potentially is a condor for maybe end of month, early June expiration, based on the monthly quant levels. So if we clean this up, right, we'll get rid of the level for now. So we have got L2 down right around 3,700, and then we have got H2 around 4,450-ish. So what's interesting here is at this point, let me see. Yeah, we'll look at a weekly chart. So what I would do, guys, is I go to SPX. And keep in mind, we'll see what the market opens tomorrow. Spreads could change. Y'all know how it goes. But if we're going to do the monthly levels here, we could go to June 1st. So to the downside, let's see, maybe 3,750, 3,700. And then to the call side, we're saying, well, I'd like to do 4,500. We'll see if that's a possibility. Let's see if we can go 4,500. Yeah, nothing trading here right now. So for now, we'll look at 42.25, 44.50. So let's see. Again, subject to change, but just so y'all get the idea. $7 a credit. So risking $4,000 to make $700. Again, on paper, not the best risk versus reward. But if you throw this into the Analyze tab, what you'll realize is you're not really risking that max loss. If anything, once you get to your short strike, you're probably going to be down about $700. And again, we'll look at this tomorrow on the Analyze tab. I'll try to schedule a bonus session for us. Maybe we can do it live. But just as a heads up, as a primer, one idea I'll be looking for us tomorrow, as far as a weekly income trade. Then we'll see what the market has in store. If we get a bounce, we're going to look for some shorts on the S&Ps and the Apples. If we gap down tomorrow morning, and we'll look at the futures here. Let's see. Yeah, the S&P futures down 1%. The QQQ futures down 1%. So if we just gap down tomorrow, we might look for another unbalanced put fly, like we did last week. So we've got our watch list ready. We know our major focus. We know what we would like to trade. We know where we want to trade it. And then we get a few things lining up for a few income ideas. Other than that, y'all, we'll be patient, we will be disciplined, and we'll see what Mama Market has got to offer. So there you have it, guys. Quick walk through the watch list, the weekly notes, and a few setups here. Go on ahead and enjoy the rest of your Sunday, and I will talk to y'all tomorrow morning in the chat.